because we've had some questions regarding risk
Okay,
on,
cool.
risk off sentiment. So so I want to make sure that we do a quick review on risk on, risk off sentiment, and how, right, they can impact commodity currencies and your safe haven currencies. So just some notes I want to go over. So let's talk about first commodity currencies and risk sentiment. Okay. So commodity currencies, currencies from countries with significant commodity exports, right? The main ones we talk about all the time are the Aussie, the CAD, the New Zealand dollar. We don't do anything with Russian currency or really the Norwegian krone. So these are like what we mainly focus on in the group: Aussie CAD and the New Zealand, right? We talk about the Australian dollar, we talk about iron ore, those metals, gold, things like that, Canadian dollar, and Canada primarily oil, right? Some gold as well, but mainly oil impacts the Canadian dollar heavily. We talk about New Zealand in regards to dairy products, things of that nature. Okay, so when we're talking about commodity currencies and we're in a risk on situation, okay, we're looking at an increased demand, okay, in a risk on situation for commodity currencies. Investors seek higher yields and are willing to take on more risk. Okay. When we're talking about commodity currencies in a risk on situation, sentiments risk on. Also, higher commodity prices. A positive global outlook boosts demand for currencies, benefiting related currencies. Okay. So higher commodity prices, positive global demand boosts the demand for the commodities, benefiting related currencies. Trade flows, stronger global economy increases trade, especially in commodities. In regards to foreign investments, more investments flow into commodity producing countries. That's in a risk on situation with commodities. All right. So let's talk about commodity currencies in a risk off situation. All right. Which is what we've been seeing here lately, right? So you get a reduced demand. Why? Investors look for safe haven assets, moving away from riskier assets and currencies. This leads to lower commodity prices. Concerns about global growth decreases demand for commodities. So when we talk about tightening and global tightening and concerns about the growth, when you look at China and their economy and some of the news that's been coming out of there, they're the second largest economy in the world, second to the United States. There's some concerns there. Okay, so you see commodity prices start to drop off. All right. Capital repatriation. Local investors may pull funds back home for safety, selling foreign assets. Okay. Stalled investments. Uncertainty. We talk about this all the time. Halts new investments in commodity sectors. Right. So if there's less expansion, less construction going on, right? If you need a bunch of steel, right, for construction because you're expanding, you need iron ore like China. You need iron ore, right? Main ingredient, key ingredient in the production of steel, right? A lot of construction. There's a lot of transportation. You got to move those big vehicles. High demand for oil, right? Things to think about. So in essence, during risk-on periods, optimism boosts commodity demand and related currencies. Conversely, during risk-off periods, investors prioritize safety, moving away from commodity currencies. So let's move it on down and keep it moving. Let's talk about these safe haven currencies and risk sentiment. Safe haven currencies, currencies deemed stable, especially in economic turmoil, right? Ergo, USD, the JPY, and the Swiss franc. Okay. All right. Okay. So let's think about it. Okay. Let's think about it. and talk about this. So doing the risk off sentiment for safe havens, always safety first. Investors prioritize stability, moving funds into safer assets and currencies. That Swiss franc's been pretty strong, right? Swiss franc's been pretty strong. Dollar's been holding up. Yeah, and we got a different ball game playing with the yen right now, but we know why that is, right? Global concerns, fears about economic instability or crises increase the appeal of safe havens. We always say as investors that our first job is to protect the capital. Okay. Capital repatriation, local investors pull funds back to their home countries, boosting their own currency. Think about that. Okay. We don't have to be econ majors to understand this. Not at all. Outflow from risky assets. Investors are withdrawn from riskier assets and regions, often moving to safe havens. Okay. So let's talk about risk on sentiment when it comes to these safe havens. Okay. Seeking returns, investors look for higher yields and riskier assets, moving away from low yielding safe havens, right? Put that money back in the market, right? Where you can get a greater return doing risk on situations. Everybody's waiting on these reports, the earnings reports from NVIDIA. Heard a lot about that. See what happens. Okay. Global optimism, positive views on global growth, reduce the need for safety focused investments. Boom in risk assets, commodities, emerging markets, and stocks often soar, overshadowing safe havens. Okay. We know before this current correction that we've seen with the concerns out of China and a potential of further rate hikes from a lot of these central banks, right? We know that the market was on a tear. Everybody's, hey, what recession, right? You heard a lot about the soft landing. Foreign investments, capital flows into countries, sectors with high growth prospects, reducing demand for safe haven currency. So in summary, safe haven currencies thrive when uncertainty and fear dominate, as they offer stability. During optimistic risk-on periods, they often underperform as investors chase higher returns elsewhere. Makes sense? All right, so let's go. So you guys have that for your reference now. Keep that handy. All right, so let's take a look at the DXY. All right, still just stalling. Okay, the almighty dollar is just ranging on us, right? So there's the daily chart. It's just kind of moving sideways. One day is up, one day is down. We still haven't broken that trend line. We're at the top of this range pretty much, right? We know we've got that level there, but right now, this is where we're hovering. Okay. So let's see what happens tomorrow. We got some more earnings reports coming out. Big one, NVIDIA, that's been on the tear because the whole AI and all this other stuff. Let's see what happens with that. See if it serves as a catalyst. Maybe it ends the correction and we get back to risk on in the markets. All right. So let's take a look at, for example, our Aussie Swiss. We know the Aussie is what? We know it is a safe haven. I mean, a commodity currency. It's been moving to the downside. It's run into some key levels of support. It's been taking a beating, right? Largest partner, China. China's having economic woes. It's been following the ABCD wave straight down. We came into an extension on the weekly. Okay. We're in a 118, 127 zone on the daily, right? We got a 382 on the daily, a pullback, a correction right here to 382 up against that 61, 64 level, and it just collapsed. Okay. Technicals and fundamentals. It all matters. But you can see how now we're at this 127. We hit that weekly de-extension. That's what this red line is. And you can see here that we've now formed an official low. Our stochastic is in the buy zone. Okay. So at some point, right, even in risk off situations like we have been, we eventually find a low price, and there's the potential where things will start to turn and price reverses. Okay. And if we move down through the charts, we'll see. So now we have a confirmed low. Stochastic is in the buy zone on the daily. So now it's just a matter of what we're looking like on these lower time frames. So here we are on the 4. We've been waiting. Patience pays. Okay. We know we've got a brand new AB boundary. We've got to pull back to a 236 price collapse, broke our B boundary. That's an 80-20 scenario. We've been waiting on this trend line to break. We definitely used additional confirmation. Why? Because the Aussie is a commodity currency. We've been risk off. It's been taking a beating, but at some point, the price gets low and you find buyers perched somewhere. And right now, it's looking like we found them. And price is moving to the upside. So this play, even though we drew it up a long time ago, it takes time. It takes time. So we have to be patient. Okay. Maybe this was the only setup you were waiting on. That's okay. That's 145 pip move if we get to that 382. This is the game we play. Right? This is the game we play when we're playing, higher time frame swings, right? Now you could be like my man Reese down there on that 30-minute, getting busy on the S&P like he did. So once you get the overall framework, that's totally up to you, right? How you want to play it. You could be successful. A lot of ways to skin a cat. But this is traders moving positive. So what we're looking for is, hey, maybe, NVIDIA comes out, the earnings are positive with NVIDIA and some of the other companies that are reporting, and maybe that changes the sentiment, right? Maybe it's like, all right, we know what's going on with China. Yep, we know that JP Morgan Chase changed their forecast from 6.4% GDP growth for China this year to down to 4%. But you know what? That's still 4% GDP. Okay, still 4% GDP. That's higher than what the United States is projecting. Right. So sometimes, right, once the emotions start to subside, we know we've got issues with, hey, real estate developer, one of them filing for bankruptcy, another one's in trouble over in China. That's been going on for a long time, though. Right. Evergrande was in trouble before. Right. Then things subsided. Everybody wrapped their head around it to see, okay, what's the plan coming out of China? So it's the same thing now. Right. So yes, prices have gotten pushed down to some major lows, but at some point, if the market's going to move in waves, it recovers. Right. Buyers come in, pushes it to a new high price. We continue to watch the overall sentiment, look at the market structure technically, and decide, hey, are we still overall bearish and we're just moving to a high price? If we do, when it gets into our sweet spot, we look to sell it. We can make money on the way up and the way down. All right. All right. So let's take a look at, I want to look at this Aussie NZD, see what we got going. What are we looking like? Right. So Ryan spotted this AB boundary on the daily a while ago, and it's just hovering, right? It held at the 61.8, held at 107.22, and it's just been moving sideways. We know this is a choppy pair. It's kind of like the Euro GBP. You kind of get the same thing with the Aussie NZD. Hey, most of the time it just can't make its mind up, but hey, that's a potential play there. All right, if we start to see the Aussie recover a bit, we may see that push up. So that's one to just keep an eye on to see if you come into your lower time frames, do we start to get some higher highs and higher lows, some pullbacks? Right. And even right, because it's so choppy, if I come in and I just look at this small wave here, what is this going to look like for me there? Do we hold? Okay. Do we hold once that stochastic gets back in the buy zone? This is a 15-minute, right? Do we hold in that zone and then continue long? So that's a possible play there on the 15 for that Aussie NZD. Only if we hold. Past resistance becoming future support. Definitely look for upside confirmation on that. All right. That's been a tricky one.